A lot of homeowners right now believe the market just needs a little bit more time, a few more months, a better spring, lower rates, better headlines, and on the surface that thinking feels pretty reasonable. But the numbers we're seeing right now do not support that assumption. In fact, based on current data, waiting is not neutral. It is a decision, and in this market, that decision carries a real cost. Let's get something clear right from the start. This is not a seasonal slowdown. This is not a short-term pause, and this is not one of those markets where you wait for confidence to return, everything just snaps back into place. The usual seasonal logic does not apply anymore. We are dealing with a structural shift. Inventory is rising. Prices are slipping, sales volumes remain weak, and buyer urgency is near historic lows. And at the same time, one of Vancouver's most important demand drivers, population growth through immigration, has slowed materially. That matters a lot. Because this market has always relied on steady population growth to absorb supply, when that slows, the math completely changes. Now layer that on top of the reality that many sellers are still anchored to 2021 pricing. Those prices no longer exist. Not emotionally, not physiologically, and certainly not mathematically. The gap between expectations and reality is where most sellers get hurt. Now let's talk about what the data is actually telling us. Inventory is up roughly 19% year over year. Prices are down about 4.1%. Sales are well below long-term averages, and buyer behavior has fundamentally changed. Buyers are not emotional right now. They're analytical, they're cautious, they're patient, and they have a ton of options. That combination is powerful. Because when buyers are patient and supply keeps rising, sellers lose leverage. Not all at once, not dramatically, but steadily. And that's where people misunderstand what this market is doing. This is not a crash, this is not a panic, and this is not forced selling at scale. This is something quieter and often more dangerous. It's a slow grind. Based on everything we're seeing right now, my best guess is not a sharp drop, it's a slow decline. A market that continues to soften or drift lower over the next 12 to 24 months. And that outlook is not unique. It aligns with what the majority of people I know in the industry are seeing. Agents, brokers, lenders, developers, investors, different perspectives, same conclusion. No one serious is underwriting a fast recovery, and no one is expecting a strong spring reset, and no one is positioning for a sudden surge in demand. Interest rates may come down eventually, but not dramatically. Lending standards are remaining tight, buyer confidence is remaining fragile, and inventory continues to build. That combination does not create upward pressure. At best, it creates stagnation, and at worst, it creates continued erosion. Now let's talk about pricing, because this is where sellers make their biggest mistake. Most people assume that pricing high gives them room to negotiate. They assume that they can just test the market, and they assume that buyers will make offers if they're interested. That logic does not work in this environment, because the first week on the market is everything. That's when the serious buyers are watching. That's when listings get the most exposure, and that's when urgency exists. If your price is wrong during that window, even slightly, momentum disappears immediately. And in this market, buyers do not chase. They wait. They watch, they compare, they move on. So what happens next is predictable. Showings slow down, offers don't come, feedback becomes vague, then weeks go by, and eventually price gets reduced. But at that point, the damage is already done. The listing feels stale. Buyers assume something is wrong, and even if the home is solid, the perception has completely shifted. At that point, you're no longer negotiating from strength, you're negotiating from fatigue. And more often than not, the home sells for less than it would have if it had already been priced correctly from day one. And that's how overpricing quietly compounds those losses. Not because the home is bad, not because the seller did anything wrong, but because the timing and the perception matter than most people realize. Now let's address the fallback plan that many sellers consider next. Renting it out and waiting. On paper, it sounds safe, and in practice, it shifts risk rather than removing it. Being a landlord is not passive. It comes with maintenance, repairs, tenant management, and a ton of uncertainty. If a tenant does not vacate when you want to sell, your exit timeline collapses. If you've already purchased another property and your sale is delayed or fails, you could be in breach of contract. In British Columbia, that can be serious. That can expose you to legal claims, financial damages, carrying costs, and legal fees. These costs add up quickly. Next, let's talk about cash flow. Rents are down close to 8% year over year. Mortgage payments inputs are higher than what they were a few years ago. Property taxes, insurance, and maintenance have all increased. And if rent doesn't fully cover your costs, you're subsidizing that property every single month. And all of that is happening while you hope this market recovers, which brings us to the most important question: how long are you actually willing to hold? Because it's not going to be a 6-month wait. This is not going to be a one spring fix. This is not a short-term inconvenience. And based on current conditions, this market could take years to meaningfully recover. 3 years, 5 years, possibly even longer. So the real decision is not whether prices might recover someday. It's whether you are prepared to carry the property financially and mentally until that actually happens. And here's the part many sellers struggle with emotionally. If you bought before the peak, you're likely still ahead. You're not taking a loss. You're giving up a paper gain that wasn't ever guaranteed. That number was never locked in. It was never cash. It only existed under very specific conditions that no longer exist today. Holding on to that number is understandable, but it is also what keeps people stuck. The sharpest sellers understand this. They're not waiting for the market to return to where it was. They're making decisions based on what it is. And if you're buying in the same market, you are buying at a discount as well. You're trading in the same market. They are not losing on one side and winning on the other. If they're exiting, they're doing it before further softening, not after. They're staying in control. They're not gambling on timing. They're not hoping for headlines to save them. They're acting based on data. If you want to know what your home is actually worth right now, based on real buyer behavior and current market conditions, there is a link below to a valuation tool. No pressure, just information, because clarity beats hope every single time. And if you think selling in this market is challenging, buying without the right strategy is even more dangerous. Thanks for watching, and I'll see you in the next one.